Hello, everybody. Welcome back to Trading with Artists and Will. I hope everyone is doing amazing. This is going to be your weekly trade plan with me for the week of August 18th. Let's first take a look at the red folder news that we should be watching out for. Then I want to take a look at cryptocurrencies and see that divergence that we're seeing right now. And then we're going to take a look at 6 names that are heavily on watch for this upcoming week. Let's do it. This week is a little bit sparse in terms of economic data that we should be watching out for. So the first thing that's going to be really important is likely going to be Wednesday at 1 p.m. Eastern when we get the FOMC meeting minutes. I know that these minutes literally is just recapping what was said in the previous meeting, but the market likes to be a little bit fickle sometimes and can react a little bit in terms of intraday volatility. The next thing to really watch out for is going to be Thursday when we get unemployment claims as well as PMI. So this is going to probably dictate how Thursday goes in terms of price action. And then we close off the week on Friday with the Jackson Hole Symposium Day 2, where Fed Chair Powell will speak at 9 a.m. Eastern Time. This is likely going to be the heaviest indicator for how we're going to treat the rest of the month. I think we're actually going to be, I'm personally leaning bullish for the rest of this week as a kind of build up and hype towards Jackson Hole. This is really important because it's likely where the Fed will give more hints on whether or not that we should most likely get a rate cut in September and then how many we might get for the rest of the year as well. All right, now let's take a look at the cryptocurrency divergence here. So by divergence, here's what I mean. Bitcoin here briefly tapped the new all-time high at just shy of around $125,000 per Bitcoin, and then we got absolutely smacked down. And this is kind of that range that we're seeing from the lows of around 112 to 120,000. And we see a heavy rejection and we failed to close above this 120 area. Meanwhile, on the other hand, when you compare it to Ethereum, we are actually having crazy inflows with buying pressure and volume, and we're just shy of hitting new all-time highs. So we did just recently break this consolidation range at around 3.8, but the all-time high level is actually at around 4.9. So this comparatively is holding up way stronger than Bitcoin, and it's really interesting because this divergence could be a big tell on what's coming for the next coming months for crypto. Let's dive a little bit deeper into this. Usually when Bitcoin starts to lose its market dominance, market inflow and buying pressure goes directly into Ethereum because they're the two big giants in cryptocurrency right now. And this usually indicates the second phase of the cycle as a whole, which indicates that the top is likely coming very soon. Now, there's a lot of factors that are different this cycle than any other cycle that we've had, right? Because we have so many more institutional players in effect now and ETFs that directly buy Bitcoin and Ethereum and even Solana now. So there's a lot of questions as whether or not we're going to get those deep pullbacks in crypto this time around, especially when there's so much more institutional support. Just simply because, can you imagine if you have an ETF or a portfolio with an actual institution and then Bitcoin just does a crazy pullback like minus 40%. I don't think investors would be really happy with that. So it's really interesting to see if we will get something like that happen again. Obviously, this is completely newfound territory, so we're just going to have to play by ear. But if we're following the classic cycle, usually when Ethereum starts to get this inflow, it's likely going to be an incoming top within the next quarter or two. So if this continues to happen, we'll see large caps start to get inflow. So this is going to be your Solana, your AVAX, Link, all these bigger large caps, probably the top 20 in terms of market cap, will start to see huge inflows in cash. And then once we see that happen, we'll see a little bit break and then a quick altcoin season. So these are going to be your meme coins, NFTs, crazy stuff. This usually lasts 3 to 4 weeks, and there's not really like a telltale sign when that flow happens. It can abruptly end and crash 80%, 60%. So if you are in these altcoins, it's important to note that if you get this crazy inflow and you get lucky on a coin that just absolutely goes parabolic, take profits on the way up and don't be too greedy because you don't want to get caught back holding. Other than that, let's dive right into it. There's going to be 6 names I really want to take a look at this week that I think we can position ourselves really well, assuming that it goes the way we want. Let's jump right into it. Bull has a really nice look because what we see is that there's a trend line resistance that it's approaching, as well as a horizontal resistance line at around 16.34. And when you go on the weekly time frame, what you'll see is that we had this really big buying candle on this week of July 14th. It went from 12.3 all the way up to like 17. And this is actually a 43% increase. So logically, it makes sense that we're going to see some consolidation to take it as a breather before we likely have another leg up. And what we see happen is this is 4 inside weeks within this candle. The volume dried up, and then we're starting to curl in price as volume starts to increase as well. And we just closed above this weekly ATMA. That's a fresh one that was just created because this was the most recent IPO, but it looks really good. The point that I want to really look at in terms of entry is a daily healthy close above 16.34, as that's the point of contention where we rejected once here, and then we rejected again here on the Monday of August 11th. So if we're able to get a really good close above this consolidation zone, that gives me more confidence that we can have another leg up to target at least the high most recent of around 18.32. So above 16.34, I want to enter the 919.20 calls. And the final price target, honestly, is going to be $20 as the mental number. And then when you fib it up, you actually get it almost the exact same price too. So 0.618 level is almost exactly where price reversed here when we had that intense sell-off. That gives you confidence that these fibs are likely working. And then that 20 is that 0.236 extension point. So 20 is going to be the final price target on Bull. The next name is going to be Uber. This one is not as clean, but I really like it above 93.6. So if we can get a close above this 93.6 level, I'm looking at the 919.95 calls. I'm getting this 93.6 level from this horizontal resistance point. So all the way back in May, end of May in 2025, we had this all-time high break to 93.5, then we rejected really aggressively. We fought here before we finally broke it. And I see this little zone as a failed breakout. So we did manage to get a close above it, but then we didn't actually hold it, right? So what we really wanted to see happen here on this retest of this 93 level is that we wanted to see it as use it as new support and then bounce back up. But unfortunately, that's not what happened, and it actually sliced through that level, but then we actually used it as resistance against here. And then we also did it again here. And then most recently on Friday, that was a big contention point too. So clearly this 93.6 level is an area where Uber has really struggled to break past cleanly. So I want to see a daily close above this 93.6 to even give a shot at calls and going long. And then the first target is going to be this 97 level, which is going to be that local high where it tried to sustain that breakout. And then the next ultimate final price target will be around this 100 mental level. The third name is going to be Hinge. It's another more recently IPO'd company, but it just had earnings, and it's a very classic power earning gap, otherwise known as a peg. So a peg is where you have earnings as the catalyst, has a crazy gap up, and then we see this gap up level get defended. So this is exactly what's happening here. We had this gap up. Even though price started to sell off, we never actually broke past this range on where we had the actual catalyst happen. And now we're starting to see Hinge use the ATMA as it caught up to price as the bounce point and new support to bring it and spring it towards the highs here. So I really want to enter calls, the 60 call for September on a break of Friday's highs. So that's going to be around the 60.4 level. And I don't want to target that 62, that's a little too close. But because these are new all-time highs for a fresh name, it's price discovery. So things can go pretty crazy when you have price discovery. So I fibbed it up. I used the pivot low at around 33 all the way to the more recent 62 level where we had that earnings peg. And the 0.618, not as clean again, but it's around that area where we really struggled to break past and actually pull back really aggressively. So that gives me confidence that it's likely an area where, even though it's not clean, it's a good area to use as a judgment for support, as well as that 0.618 level as the golden zone to hold up pretty soundly. So if we're able to break 62, I want to target a mental number of 65, and then the final target at around 68. Depending on how aggressively this price actually moves, if we get to 68 really quickly, I'm going to want to try to hold some runners with a stop and break even, and just to see if it can go ballistic in this price discovery level. But ideally, what we want to see is a clean break past this 60.5 level, and then just absolutely rip past 62 from this power earning gap. And the next name is going to be RGTI. So if you don't know, RGTI has absolutely played mind games with me, as I did enter this on the original pop here, except I got stopped out. It was literally this weekly candle where I got stopped out, and then it had that crazy pump. So missed out on a lot of gains, but when a stock sets up again, you can't be scared and you have to try and try again, especially looks really good. So this is RGTI on the weekly time frame. You're starting to see a really nice flag develop and just on this trendline resistance. So not the cleanest weekly close. We would have loved to see a close above these levels at around 17.4 to really give you that consolidation and wants to clean breakout more. But instead, we see a pretty aggressive sell-off towards the end of the day. That's on that Friday pullback. But if anything, this shows you that it's a post-earnings play and volume is starting to decline. So when this volume declines, even though price doesn't even move that much, that gives you confidence that this area is likely going to hold up. So what I really want to see to enter this is probably a break of 17.4, and then we actually hold that level. And I want to use the October 20 calls because I think September's might not be enough time, because the last time I took 1 month out OPEX contracts and just got shook out because of how aggressive and volatile this stock can be. So Octobers are likely the contracts I want to look for. Gives you that room to breathe so you don't actually have that much pressure with theta, but then you can still be pretty aggressive because it's not like a leap and you can capture a lot of great gains from this. And I want to target the recent highs at around 21.4, and then the ultimate target is probably going to be around 25, 26. So I did another fib on this one, and again, it's just not really clean. Like these charts are just not the cleanest. Like I tried fibbing it from the local low at 79 cents. Obviously, that's not really the most accurate because it's such a huge range, but it doesn't really make sense to do it anywhere else, right? Because if you do it here or even here, that's kind of like in the middle of the initial first leg of the continuation move. So if anything, this has to be the most logical fib that you can see. It used the 0.5 as a great area to bounce, and just that's why I'm leaning towards October's and just trying to see if we can capture this move. And then the next name is going to be Pony. Pony is a packaged software company and it's developing a really nice base just under the 16.36 level. So if we got on the weekly time frame here, it's a little bit more clean. You can see that it's using this little area as great support, and we're starting to see this little consolidation and breakout under. And if you fib it from the hellos at around 4 all the way to the more recent move all the way to 21, it actually tapped the 0.618 almost perfectly on this weekly candle, and now we're starting to curl above. The weekly close more recently is actually a bullish hammer with a lot of volume. So that's actually pretty bullish, and we just recently had earnings too. So earnings was a pretty muted reaction, honestly, which is showing you that things can go pretty crazy here if because we have that catalyst out the way, right? You know, more boosted, inflated IV, but also the company and investors and buyers don't have something to anticipate and be cautious about. So I really want to see a close and push above the 16.36 level. But the area to play caution around is that there is a big volume area around 17. So if anything, I want to look at the 16.36 to 17 level and see if we can actually push past it. The only problem with a name like Pony is that because the market cap is only 5.5 billion, this name could just gap and go. So the timing and entry on this name has to be very precise. So ideally, I think I want to enter at 16.36, and if we hold that, that gives me more confidence. So I want to enter the 17.5, and I want to target the highs at around 21.6. And then honestly, eventually we can either roll these out, or depending on how amazing and crazy this move can be, I want to target the 23 and eventually at 0.36 extension to $25 per share. And lastly, the next name is going to be TEM. So this is TEM on the weekly time frame. If you aren't familiar with TEM, it's a very popular Nancy Pelosi stock. She has disclosed that she's purchased a lot of shares, and actually I believe leaps too on this name. But on the weekly time frame, you actually see that price hasn't really done much. Since October, September of 2024, it's been almost a whole year where it's done nothing, basically, right? It's had this huge range from $30 all the way up to 72. But if you bought in August of 2024, you would have had to wait a whole year before you were basically almost break even and nothing has happened on the stock, right? But you can't deny the fact that this volume on the weekly is absolutely insane. This volume candle is on par for the volume that you see when we broke out initially on the third try past the 72.45 level all the way up to $90 per share. I believe that's kind of when people found out that Pelosi bought this stock, and so a lot of investors were flooding money into TEM. A lot of hype was going in, and that's when you started to see that huge pump. But then, of course, you get that really aggressive pullback. We had earnings, and price pulled back really aggressively. But it's trying again, and we're starting to break out. So I think it's worth a shot at the 80 calls for September. And I think what I want to see is some tightening in terms of price. I don't want to see just an absolute moonshot from here because that type of move is not sustainable. So it's a little bit extended off the 8 EMA here. And when this happens, you usually don't want to chase an entry like this because on the scenario that we gap up and you chase that, the risk to reward is not favorable because it can easily jump up here, but then it can pull back all the way to the 8 and then eventually start building up and actually break out again. But if you enter all the way up here, that's not good because your contracts not only get absolutely crippled by theta and because you bought the top essentially, you will need a way bigger move to actually break even and actually start to be profitable on your contracts. So I want to see some more consolidation here at around this breakout level. So maybe like something like this, right? And then eventually as the EMA catches up, that's when you want to enter on the break of this type of consolidation above this level. So that's what I want to see happen. This is something that we'll likely have to play by ear and enter off of the consolidation and eventually break off of that candle. Ideally, what we want to see is an inside day candle for the week, and we actually close near the highs at 72.5, which should give confidence as well as time for the 8 EMA on the daily to catch up, and then we get that push towards this, 90 level, and that'll be the ultimate price target, maybe even 100 from there. And to close it off for the week is going to be docs. The options chain is not very liquid, so this is going to be a name I'm considering buying commons in as a position. And here's the reason why. When you fib it up all the way from the initial earnings in August of 2024, when it started to make that leg up, and then you use the pivot high at around 85, you'll see that the 0.618 is respected really well. And then now we're starting to consolidate here under this base. And this kind of reminds me of Pony. So let's compare the two together. You'll see that the charts almost look identical in terms of the consolidation, where it's under a base and a price level, and it's looking like it wants to break past it and actually get this second leg up. So on the weekly here, you see a nice volume push post earnings, and we print that nice inside day where we close at the high. So that's exactly what we want to see on 10 essentially. So for docs here, I want to find an entry above 67.7, and then the first TP will be at these pivot high at around 85. And then from there, all these runners, I want to target this 99 and then the mental number of 100. So obviously this is a really big range, but the really comforting part is that to capture this 47% move on a commons position, very low stress, right? We don't have to worry about theta, we don't have to worry about open interest, anything like that. All we want is just enter with commons and we just let it ride from there. And that wraps it up for this week. Thank you so much for prepping for this upcoming week with me. I hope everyone does amazing and good luck with your trades. Honestly, as you can tell, the setups are starting to look a lot more thin in terms of the clean ones. So it kind of aligns really well with the seasonality of the market where September is usually more bearish and actually very difficult to trade to the upside. And the other thing is this, we have FOMC in September, which is where the mass majority expect the first rate cut to be. So it's a typical hype run up to the rate cut. And what likely happens is going to be a pullback and sell the news type of situation once we actually get that rate cut. So, and obviously we can't predict the market perfectly. We can only trade what's given to us, but it's just something to keep in mind and always stay on your toes. Other than that, I will catch you guys next week and see you guys later.